All right, welcome back into Market Day Report. I'm Scott Shellady, otherwise known as the Cow Guy. Thank you very much for joining me today, joining us. Hopefully you've got us on in the background somewhere, if it's the garage, the shop, the barn, even the office. We'll take it. We like being with you. Let's see what these markets are doing. I've taken over after the halfway point. Mr. Tony St. James has given me the baton. And here are your prices, drum roll, please. 2 cents lower in D's corn, 4.11 3/4, half cent off the low of the day. We've had a very small range of 3 cents. Nothing's going on, folks. A penny lower in the March to 4.26 even. That's 3 ticks off the low of the day there, and we've had a 2.5 cent range. Boy, oh boy. That one's out to lunch, gone fishing, right? Let's take a look at soybeans. What do they got in store for us? Well, an up market here, double digits, and it can't really bring up the corn with it. No, it was up 10 1/4 cents to 9.75 1/2. And that's, what, 3 cents off the high of the day. Jan, that's up 11 1/4 cents to 9.90 1/4. That's, 1 3/4 cents off the high there as well. And we've got about a 15-cent range, so we'll take it. But that's some good gains, getting back some of the stuff we've lost. We're up about 10.5 cents across the board when we talk about beans. Let's go to Chicago wheat. The wheat in Chicago's up 2 3/4 cents up front in D's, 5.73 1/4 last there. Well off the highs and the lows. We're kind of in the middle of the range. We've had a 16.5 cent range, and we're right in the middle of it. 5.73 1/2 is last. 5.93 is last in the March. That's up 2.5 cents. And again, that's 6.5 cents from the highs. And I guess we could say that's, what, 8 3/4 cents from the lows. So right in the middle of those ranges. Not a lot going on, but we're still a little bit better, anywhere between 1.5 to 3 1/4 cents better. That's Chicago wheat. From Chicago, let's go to Kansas City and take a look at the hard red. This one's mixed. Up front, we're up 3 ticks, or 3/4 of a penny. 5.75 is last. Again, 8 cents off the lows, 9 1/4 cents off the high, 9 1/4 cents off the lows, 8 cents off the highs. So that will give you an idea. We're in the middle of the ranges here. March is just 1/4 cent, 1 tick lower. 5.88 1/4 is last, and again, that's pretty much in the middle of that 16-cent range. We're a half cent lower in the May. 5.97 3/4 is last there. That's the hard red in Kansas City. Let's go from Kansas City to Minneapolis. Minneapolis is 2.5 cents better. That D's contract stands at 6.09. Again, 9 cents from the lows, 8.5 cents from the highs. That's pretty much smack dab in the middle of that range. March is up 2 cents to 6.32. And let's take a look at cotton. We'll get to our guest analyst. Cotton's down 67 points in D's. December cotton stands at 69.89, just 3 ticks off the low of the day, kind of trading heavy. Let's bring in our next guest analyst, Mr. Scott Wilson. He's with CHS, and he's up in Inver Grove Heights. Oh, Bloomington, that's right. I forgot. All right, Scott, thanks for being on, brother. What do you got
No
for
problem,
us?
thank you.
What do you got for us?
Well,
What's the top of mind?
Yeah, so energy markets obviously been very reliant on headlines in the past couple of weeks. We saw a lot of geopolitical risk premium exit the market earlier this week. Israel, their counterattack on Iran was focused on military assets instead of any energy infrastructure. So that had markets lower. And then today we've seen some strength on some news that OPEC Plus, they are currently cutting 6 million barrels per day from the market, which is about 6% of global demand. That includes that 2.2 million barrels per day of voluntary cuts that's supposed to start unwinding on December 1st. But this morning, Reuters reported that they may delay those output increases. So markets are trading higher on that news. It seems like every time we get down to that $70 threshold for Brent crude, they are being very they're making sure the market moves back higher on that. So that's kind of the big thing going on today. So what does that mean for the U.S. and products? So crude production posted their third straight week of 13.5 million barrels per day production. That's a record, 3 straight weeks of that. Refinery efficiency in the U.S. humming along really well at just under 90%. That's well above the 5-year average of 85%. So crude and product inventory below those 5-year levels, but diesel futures currently 36 cents below the 5-year seasonal average. And then gasoline futures are 10% below the 5-year seasonal average. So price is very appealing at these levels for products.
Yeah, I'm going to talk about this on my show later on tonight. I mean, Goldman Sachs is calling for it to be a little bit better. We have some other analysts calling for it to be lower. I mean, that's what makes a market. I would say globally, I feel like the stocks are pretty tight, but we just can't catch a bid. And, even I thought it was odd that after Israel launched those strikes in Iran, everybody was so relieved, per se, that they didn't hit anything that was energy related. The market sells off $4, but that doesn't mean they're not going to do it tomorrow or next week. I didn't understand that reaction at all. So it's not acting like I would understand. Maybe you know better than I do, but I just thought that was very odd.
Yeah, no, I agree. I agree 100% with you. Yeah, anything can happen at any time, and we're entering a time frame that traditionally sees a pullback in futures and basis values for crude end products. So I do think we have some additional opportunity to the downside as we head into December and January. But I definitely think, like I said, once you get below 70 for Brent, we've hit 67, 66 for WTI, but I definitely think that risk to the upside is definitely there. Like you said, geopolitical risk premium could definitely enter the market at any time. And then if OPEC does decide to extend their production cuts, we may not see the pullback that we're accustomed to seeing in December and January. So that's why I think it's a good time to at least start looking at some of these values, because diesel below 225 and gas around $2. Those are great values.
Yeah. All right. Great stuff. Thank you very much, Scott. Scott Wilson. He's with CHS. He's in Bloomington, Illinois. And we're going to go away. We're going to pay some bills. We're going to come back and talk more livestock with me right after this.